Hey everyone, welcome back to another video. Today I just want to go over my outlook for TLT, which is an ETF for 20-year bonds. Um, so basically, if you don't know already, I am in long. I got TLT calls a couple weeks ago, and I think that we have a very strong case for an upside momentum in TLT. Maybe not next week, next month, but certainly over the next couple years, I do think that we have a strong case for bond yields to go lower and TLT to go higher. So what you see over here is arrows that indicate another other periods of time where we are doing something similar to where we are now. So the requirements to have this. So also some of these are double arrows, which is a very strong case that a strong very high probability that we are doing something very similar, and one arrow represents a low probability case. So basically, what needs to happen is that we are in between the 20 and 50 moving average on the monthly. That we are reaching the 50. Oh, sorry, I forgot one of the indicators. The 100. So also that we are hitting the 50 and the 100 weekly moving average, and also somewhere like we have hit the bottom on 200 weekly moving average, and on the daily that we have this 200-day daily moving average and 20-day moving average crossover that they're crossing the big here. So that's literally all the requirements needed to have two arrows. One arrow, it means that they had like one or like a couple of the requirements, but not really. So the double arrows mean that like we've pretty much hit all the same things. So yeah, let's start with 2017, which I think is like the strongest, which is the most similar to what we're doing today. So 50 to 20 on the monthly, 50 and 100 acting as resistance. The 200 weekly was acting as support. Same thing as what we're doing now. And let's go back on the daily. And we have this 220-day crossover. So you could see on the arrows what we did here. So basically all of these moving averages are doing pretty much the same thing as what we are doing now on all the time frames, monthly, weekly, and daily. I guess that's not all of them, but like the most significant ones. And we have a pretty similar structure to what we're doing now. So you can see that this is 2017 of June. So back in late 2015, early 2016, we did this massive rally in bonds, and then we rapidly sold off. And there's a structure here where you can see this clear gap down over here, and where this is like the support zone that I've identified. And so if you would have like drew this line here, and it would have been very important support, very important resistance here, and it was also very important resistance. And so like bonds are not as tight as equities. They're a bit slower and move like they have like they're not like as exact. So you need to have like zones of where resistance and support could be. So this structure in general that you see here is pretty similar to what you see today. So so this is now, and a year ago we had this massive rally in bonds, right? And you can see that we, just like in 2017, we have this gap down right here, right? And we have these old support zones right here, here, acting as resistance over here. So just take a good look at this, right? This general structure, and notice how it's pretty similar to this structure right here, right? Previous support acting as resistance. So basically what I'm trying to get at here is that when we have this 220-day crossover, that usually is a trigger for a good rally in bonds. So right here, we were kind of riding the 20, and then once we hit it, we and a crossover happened. We bounced up tremendously, and this was a what is it, a 3.5% rally in bonds. Which, if you're in equities, that's not a lot. That's not a big thing, but in bonds, that's huge. And so if you got like calls over here and now it's all the way over there, that it's like an easy 300% return on your calls. Well, I guess it depends on the calls, but if you got like, just like on average, it would have been like 3x. Right? You could have gotten a 3x pretty easily on this. So that's what I was looking at earlier. Actually, I'm going to take away a couple of these lines because they're not really necessary. It's actually pretty distracting. Um, I'm just going to show what's important. So yeah, so basically we've been riding this 20 for the past couple of days, and now we just hit the crossovers. So I was like, oh yeah, I was super excited, like we're about to gap up, but today was a bit of a disappointment. So, there's a real possibility that TLT just gets below the 20-day, and then that's when I know the trade is over, and then I'll just hop out. So I was in for $4,000. I'm down $600. So yeah. So if we get below here, then it's over. But if we manage to hit this resistance level, right, this 153, 154 level, which coincides with around 1% on the TNX, which is 10-year yields, then my $4,000 will turn into $8,000. So let's go back to the other time period where we're doing something similar and turn back on all of these indicators. Yeah, they're a bit messy, but they're important right now. So another really similar period of time is in 2010, right after the Great Recession. So I think not necessarily on a technical level, but on a fundamental level, this is the most similar time period to now. So there was a giant recession. We did a lot of QE. A lot of people thought we were in a big reflationary environment. Turns out that there was not any inflation after 2008, and so yields fell and bonds went higher. So that's pretty much on the fundamental on that outlook. That's what we're doing pretty right here, I think. Same thing, like massive recession. We do a lot of QE and stimulus. People think that's inflationary. We've had this reflation trade for the past couple months, and I think now it's the time when it starts rolling over. So let's just go over the technicals, which is still very strong. It is very, very strong, but just not as strong as 2017. So we could see that there was a 20 on the monthly. We're on the monthly right now. There was a 20 monthly resistance, and there was a 50 monthly support. Same thing as what we're doing now. And then on the weekly, we have a 100-day acting as resistance. The only problem is that the 50 weekly wasn't really, it's not where it is right now. So like right now, we could see that the 50 and the 100 are like are in similar spots, but the 100 being like the most important one. But yeah, so it's pretty similar, except, ooh, where did I go? Where am I? Yeah, so it's pretty similar with the 100, but it's just that the 50 weekly kind of, not so good. So that's why I think this is a weaker technical analysis argument compared to 2017. So if we look on the daily, we could see that there's a crossover of the 200-day and the 20-day purple nail line crossing. And so when that happened, you could see that we had this big rally up to this support zone or resistance zone that I've laid out here. That is the same thing as, yeah, so that's what we're doing here. And so this is not as good of a structure as what we're seeing now in 2017, but it's generally the same thing, right? Big rally in bonds, we got lower, and there was a period of support, this area of support that was acting as resistance here, acting as resistance here, and clear resistance here. And so it was safe to assume that it would also be a point of resistance here. So if you can see the similarities, you'll see that, it seems that bonds tend to like repeat themselves over and over. So the point was that we're at 2010, after the fundamentals are the same and the technicals are pretty much the same, we bounce off this 20-day moving average, and then with the crossover of the 220, we shoot higher to this resistance zone. That's why it has two red arrows because I think that's what we could do. And this move was like a 7%, so really high. So let's just bring it back to where we are right now. Can you see like it's like the same setup, right? It's pretty much the same setup. We're bouncing off the 20. We've hit it once, twice, 3 times, and I think from here we could go do a 5% move. The crossover happened, but we haven't gone that giant move that I really expected or I really wanted to happen. But the market doesn't have to do anything that I want it to do. It doesn't have to follow the same patterns as we've seen in the past. So yeah, so my outlook, if things go my way and the way I want it to happen, it probably won't at this point, but if it does happen, then we will see some sort of rally to around here, and I think this will be a hard resistance. And then after that, I think we'll have a couple months of consolidation. So let's take away some of these annoying indicators because there's like way too many. What do I need to take away? I need to go like this. Okay. So as you can see in the other red arrows, what happened was that after we hit that point, sure, in 2017 we had like multiple attempts to get up really above this resistance zone, but ultimately we just fell back, and for this was like December of 2016 and all the way to like this is like months like, oh yeah, no, this is end of 2017-ish, and this is the beginning of like summer of 2019. So like a year and a half, pretty much just like doing nothing until we really had the bond rally. And so let's actually look at this on a different perspective. Let's look at it on 50. Yeah, we don't need this. Sorry, I'll try to set this up better beforehand. Oh, nope. Okay. So if we look on the monthly, seems that like, oh, no. I need the 20. So seems that whenever we hit the resistance, we could try to get above it, but if we don't, we have literally years worth of consolidation before we go on the real bond rally. So the same thing could also happen here. In this occasion, we did manage to get above the 20 monthly average and we went up, but ultimately this wasn't the huge bond rally that we see here. So we would go back down, and this is like pretty much a year of consolidation and doing nothing before our real bond rally. So you can see like patterns of that happening. These are like different. These are like different perspectives, but on the macro perspective, on the monthly, I think that's what we're seeing here on the double arrows, and over here is something similar to what we could see here. So I'm not expecting this one to be the rally where we go break higher highs, break all-time highs on TLT, but I am expecting us to like sort of maybe like go around this area, and then we'll definitely see about a year of just consolidation and doing nothing. And then maybe sometime in 2023, we'll have the real bond rally that'll break this high and go higher. So that's the way I'm looking at TLT. That's my macro outlook. And so it's pretty silly that I decided to go in really heavy now at the tail end of this possible rally, right? And it's kind of dumb that I did that. And so I could lose a lot of money here. But, the risk to reward to me was not that bad. And also, if I get this one wrong, I'll have, next year to try another attempt at it, But that's just my technical and fundamental analysis of TLT. And I hope you guys got something out of this video. I just wanted to explain what my strategy for TLT was, short-term and long-term. And please like and subscribe, and I'll see you guys next time. Bye.